Hello traders, Gary Wagner for Trending Markets, just about 10:30 in Honolulu, 4:30 in New York on Friday, 7th day of August. Jobs report did come out. Interesting reaction to that jobs report in terms of the equities markets themselves. We saw the market continue to backslide, continue to close lower, although even with a lower close, it seems as though that range or the amount of the market moving down is beginning to compress. We cannot say anything but the fact that we saw a top when the market was above 18,000 and it's been drifting to lower and lower pricing. Dow Jones Industrial Average closing at 17,373 and change. The 480-minute chart that we look at, because what we talked about a little bit yesterday was the fact that the one characteristic that really stands out to me on a technical basis in terms of this market is this downward bias, and that's pretty easy to see. We've had consecutive lower days, but the fact that even when the market was moving up, it was moving up within a defined channel, hitting the top of this channel or resistance and then moving down. We saw it really hit pretty much the entire spectrum or the entire range within this channel line up until recently, and that was something to me that was noteworthy. And what I mean by that is you have typically seen a predominant amount of red candles on the downside. Here you only get really that one green candle. Here you get consecutive days, although it begins two candles into the move itself. Almost all consecutive green here, all consecutive red here, but we had a genuine kind of break from that when this market hit the bottom here, moved back up, but couldn't make it past really just a little above this midpoint line here. And so that to me signaled a potential change in the market, because if it breaks out of the range and misses this particular part, in other words, the space between the top of this cascading downward bias channel line and this, it tells me that former resistance is beginning to move down, whereas you've got resistance, now that resistance has moved way down. So the real question is, will we see the market then break below this channel? Because that kind of a break below this channel really signals that it's going to move into new territory and new territory on the downside. Reciprocally, if we see this market find some support and begin to barrel back up, we know we're still trading with that downward bias, but it's a downward bias within that channel. And if that's the case, that is a tradable market because you've got a defined range in there. So we'll have to see what this market does over the next week and see if it finds support in this area and bounces up, or is unable to and moves to the next level below that. Oil continues to move to the downside. We called $43 per barrel as a distinct possibility. I know that took many traders by surprise because the market at that point, I believe, was at 48 and 47. Well, we are in 43 per barrel territory, although really we're closer to 44 than 43. Price on oil today is $43.80. It's down almost 2% on the day, and that slide seems as though it wants to continue. When we look at our basic chart that we have, and I look at a more long-term weekly chart here, you can really see that week after week, and once again, we can compare this to the midpoint. It's that midpoint that you compare it to when you look at a Japanese average chart as opposed to a standard candlestick chart. We've gotten solid reds all the way down, but when you look at this week, we saw the market close dramatically lower on the day, and at the same time, the question is, will it find support if in fact it continues to slide lower and break below below 43? Will it slide lower than that, or will that be a supportive area? Traders, I truly believe we might have some technical data that will answer that question next week. Now, in terms of the currencies, we do have counter moves in the currencies to our anticipated direction. Dollars trading lower today, 97.64. We're in at 97.67, so roughly in the same area that we're in at. We certainly didn't get any kind of push to the upside from the dollar with a positive jobs report, which, as I talked about on the gold forecast just a few moments ago, it surprises me that the markets reacted so tepidly, so not strong, so weak to a really pretty favorable report. So does that tell me that it's disregarding the information, or is that telling us that much of the moves that we have seen over the recent week kind of factored in that assumption? And I'm going to have to go with the latter explanation on that potential move. Now, lastly, we'll look at the euro. Euro also, that's moving up. We have a short position. We're in at 109.15. Market's at 109.60. So that is slightly against us, but we are going to hold on to these trades. We are going to maintain our current stops, long the dollar, short the euro, and see if they want to return to their primary direction next week. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We will talk to you on Monday for another Trending Markets. Bye-bye.